Take a look at gold here, down a little bit. So I do have a long position on GLD. So I'll pull this one up. Here is my, so I've given back some gains on this one here this morning, but still holding my gold long. If we do break through support, then I'm going to stop out on this one, but it will be a small controlled loss if I do. Taking a look at gold spot prices here, you can see we've got price continuing to push up overall on this upward trend line and tagging into a level of support here around 3,300 to 3,270, let's call it. So I did get long right over here, and I do think that we do have the potential to see rate cuts in 2025. So I do predominantly stay on the bullish side of gold with support now holding. So let's see if we can get a push off this area. If we can start to take out through those highs up to 3,500 in this range, then I'll look to really trail a stop loss on this gold trade. But where we currently sit, I'm just going to kind of let it go. Right now, gold has been very sideways for a while. I'm not in a rush to see some big, huge move on gold, but I would need to stop out of the trade to control risk if we break through the lows of this support zone that we see around that 32.75 area. So I'm bullish on gold. I think the Edge Finder is bullish on gold. I'm not sure. It might have dropped down to, no, went back into neutral territory. We will get, I know this is a question for some traders right now, why isn't the COT data updated? Don't worry, COT data will update, I believe today or tomorrow. Because of the US holiday, that gets pushed back a day. So we will get COT data, but it will be delayed by 1 to 2 days. So once that updates, the Edge Finder will automatically pull it in and will update within your Edge Finder platform. So you'll have the latest data there once it comes out. And if you have the Edge Finder Smart Alerts, which are an alert notification system with the Edge Finder, you can actually get notified when the COT data drops. If you don't have that yet, send us a DM on the website and just let us know you'd like access to the Edge Finder Smart Alerts, and we'll get you one of those. What happened with the NZD pairs? Let's look. What is going on with NZD USD here? Look at that, New Zealand. What happened here? Let's go take a look. Is it NZD USD specifically? Australian dollar against the Kiwi dollar moving higher here today. I mean, dollar's strong this morning. You got dollar up 0.4%. Euro dollar's lower, pound dollar's lower. Kiwi dollar taking the biggest hit though, seems like. Down 1%. Let's take a look at some other NZD pairs. Yeah, look at NZD CAD. So it does seem like a New Zealand dollar move. I'm not sure. Did they cut rates? I think they might have. No, they have. I know they have like the RBNZ rate statement, but that's Tuesday. So not sure. Something happened. Something news related. Because that's a pretty big move lower for NZD. Oil prices are up today 1.6%.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edge Finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Nick, my trading has completely changed after learning about the world of options and especially the Greeks. Options greatly improve your vision. Bulent, the options market, is one of my favorites and most telling markets in my view. The bond market and the options market, in my view, like a lot of forex traders, a lot of futures traders, people who like indices and commodities would greatly benefit. They have no idea, but they would greatly benefit from diving in and understanding the world of options, the VIX, and the bond market, the 10-year yield. If you actually understand what the bond market is telling you. Now, I don't do it very much on my channel. You know why I don't do it on my channel? Because I've looked at the analytics. People don't really care when I talk about bonds, even though it's one of the most important markets. And I do at the end of the day, this is a business. I'm trying to keep this content as engaging as possible to the max number of people that I can. And so I do typically stick with the markets that people really care to hear about. So I'll continue to cover euro dollar and gold and the NASDAQ. But just know that if you really want to take your trading to the next level, I think everyone should know how options function. Even if you don't end up trading them, you should understand, you should take time to go learn the options market, how it trades, how it functions, how volatility plays such a key role in markets, and most people completely ignore it. Speaking of volatility, here's the VIX, 17.7 here today. Still very low VIX relative to recent history when we had all of the tariff trauma. You had to move up to 60 on the VIX. Crazy push higher here. Volatility has since really squeezed lower. The DAX is moving really nicely today. I may actually get a chance if we can take out these highs on the DAX. I'm going to look to trail my stop loss. I have a position on the ETF DAX. Take a look at DAX. Well, where is my DAX position? There it is. I have a position on the DAX. It's up $552. Would love to see, like I said, German 40. I'd love to see this break out. And if it does, I'll get a chance to actually trail stops further in. So I've got this level here. If we can take out this level, if we can break through that range, I'm going to take this stop loss and move it in. What's up, Jason? Good to see you. If stocks generally go up over the long term, why wouldn't you just buy a XXX leverage ETF like TQQQ? Wouldn't that give you a higher return, around 24% per year instead of 8%? Web trades, not only is that a strange question, but it's a great question. I've had that question and that conversation like 10 dozen times. And sometimes I even have to remind myself why it doesn't work. I'll tell you why it doesn't work. Because this world, there's nothing for free. So when you go and you take a long position on TQQQ, right? This is a triple leveraged. What does leverage mean? Borrowing money. It is essentially like if you were to go borrow money. Picture this, Jason. If you were to go borrow money from the bank and just invested it in the S&P 500, like let's say you're like, well, I want to make more money from the indices going up. So instead of trading with my $10,000, I'm going to go to the bank and I'm going to borrow another $30,000 from the bank, right? Sounds great if the market goes up. But the problem is you just borrowed the bank's money. Now, when you use a TQQQ or a leveraged ETF, or if you're trading CFDs, which most viewers in this audience, because I know, maybe 30-40% of my audience is in the US, everyone else is trading CFDs. If they want to trade gold, XAU USD, NAS 100, those are CFDs. They're leveraged products. Why do you have overnight cost to holding CFDs? Because they're leveraged. Leverage just means borrowing money. That means if you're trading CFDs, you're borrowing money. If you're trading triple leveraged, you're borrowing money. So what happens if you borrow a whole bunch of money, right, from the bank, and it goes up, the market goes up, then instead of trading $10,000, you're going to feel like a genius because you just tripled the returns by borrowing the bank's money and saying, haha, bank's an idiot, because they could have just put their own money in the S&P 500 and made, their percentage. But you're borrowing money. What does borrowing money entail? You have to pay interest. So when you are paying interest every single month, that stacks up over time. And so what happens if you're paying a considerable amount of interest over time and the market goes down for 5 to 10 years, you're going to get destroyed. Because not only are you going to experience triple the loss if it goes down, right? It's easy to look at the market in the last 20 years and say, these things are easy. They just go up. But what about, go do some homework on this for anybody who's like, and I'm not singling out Jason by any means, I'm singling out everyone to think about this. If you think indices just go up forever, go look at Japan in 1980s. Look at their stock market. It was the hottest in the world. Japan looked like it was going to take over the world. Look at the US from 2008 to 2000 and well, actually, no, sorry. Go to like 1999 to like 2010. 10 plus years. And your money went sideways. If you had borrowed money and triple X leveraged before that, guess what? You would have paid a fortune to the bank, and you probably would have blown up along the way because you've triple X leveraged. It works when the market's going up. TQQQ, you look like a genius when you leverage the NAS 100 CFD or you buy TQQQ, you do something with leverage, you buy calls. All of that looks like brilliance when the markets are going up. But it will destroy you if the market enters into a true, you'll lose everything. If you lever up into a long bear market, which we haven't seen in a long time, but I think they will come. I don't try and time when those things are going to happen. If you watch my channel, I just lean bullish most of the time. And very rarely, I was bearish going into the beginning of 2025. Not because I disliked Trump or anything, but because the market's perception of the market was so bullish. We were so euphoric going into the Trump administration that it made me considerably cautious. And it ultimately served me very, very well this year. That caution served me very, very well because I was able to buy the dip. I was very cash heavy and I started buying the dip here. I was too early, but still it was better than, what was that? That was 8%. I saved myself an 8% drawdown piece by itself minimum, because I typically will use, more tech stocks, which drop much harder and rally much higher in good times. So I know that was a long answer, but that is the trap of the indices, is people think that when they've gone up that they're just going to go up forever. But if you use leverage, triple X that number, 27%, and you're looking at a world of pain, right? Now, if you want to use those TQQQs or call options, my opinion is there is a time and a place for a very small amount of leverage. And it's down here. It's not up here. It's my personal opinion. You do what you want. What if we like pain? Then you're doing the right thing. Trading is the right place. If you want some pain and if you want to be insane, just go to the gym and trade, and then you're always in pain, right? If you're trying to get big and also try and make gains in the market, man, you're ready for a world of pain. I say that as if I haven't been to the gym in a couple of days. I'm really looking forward to working out again. I've been, on vacation. Anyways, indices just opened up. You had stock market. So I'm speaking of a world of pain, Tesla down 7%, my biggest stock position. So today I'm sitting in a little bit of drawdown. We're not really the position's still doing great, but it was looking a whole lot greater before it lost 20% of its value. This is Tesla. It's a very, very volatile stock. We'll see. IWM is a position that here's my biggest position currently is the Russell 2000 index. I am still trailing a stop loss on this one, looking for a higher low here today if we can get it. I do have a small position on gold, watching oil. In terms of top setups currently, let's take a look. Yeah, Tesla, the good thing about Tesla is I shorted some calls last week. So to hedge myself a little bit, I sold fresh 375 calls on Tesla. If you're not an options person, no worries. Essentially, I have a kind of bearish bet that Tesla will stay below 375 by August 1st. And with the price dropping here, what I could choose to do today is if Tesla continues to fall more than 7%, what I may choose to do is actually close that position for a win. So we'll see. Anyways, dollar index up slightly here today. Dollar index has been such a bear here for a while. I'm going to just take a look at some of our top setups here today on the Edge Finder, looking at Euro CAD, Euro dollar. Let's just go through the list. we've got a minute here to do this. Let's do it. Let's go through our list of stuff on the Edge Finder currently, starting with EuroCAD. Now, typically when I trade currencies, I look less at the momentum factor and more at the economic data. Typically, if I'm looking at currencies, I do prefer to look at the top setups eco tab, but for the sake of simplicity, we'll just go through the list here. EuroCAD, Eurodollar, both getting bullish reads. This one for EuroCAD looks really strong. You've had a breakout of resistance here. So if I'm watching EuroCAD, I'd be looking for a retest into this area here. Eurodollar, let's take a look here. Eurodollar looks phenomenal, really strong upward trend. At the very least, I would need a pullback to like 1.16, but really would prefer something like a pushback down to 1.1440, let's call it, for possible long side continuation. So I do like the idea of getting long the Eurodollar at these levels, 113, 114, maybe 116. Could potentially build a position there if it gives me that setup. So let's see what else. DAX. I'm already long the DAX. This is an ongoing position for me. I'm long the German 40. Well, actually, specifically, I'm long the DAX, which is an ETF. You can see I've got 500 shares of DAX, up 537 bucks on this trade currently. I had a question, and I'm not going to try and answer on here because it took me way too long, or it would take me too long to try and go through that. The German 40 CFD and the DAX ETF, why do they look slightly different? Long story short, you should search that up on Grok or ChatGPT if you want to know. But there's some transaction costs involved, and the price movements are not perfectly synced. But generally, the correlation is very high. So I actually trade. I can't trade German 40 as a U.S. citizen. I can't trade German 40 on a regulated brokerage, as CFDs are illegal to U.S. traders. So I trade the ETF variation DAX. You could also trade it on the futures market, just personal preference. Let's move on to Euro Aussie. Euro Aussie. Let's take a look at this pair. So if I pull this one up, trending beautifully. I mean, this chart looks great. Looks very, very strong. The Australian dollar looks pretty soft. Bare minimum pullback would be into this 1.79 level. Where I'd like it more would be something like this, something like this. Pair looks really good. Would be interested in buying dips on Euro Aussie at this time. Let's continue taking a look at NASDAQ. NASDAQ getting a very strong reading on the Edge Finder. Would be looking for pullbacks at the very least to this 22,100 level. The past all-time high. If that were to get retested, that would probably be a bullish setup for me. Euro Pound, taking a look at Euro Pound. I have a short position on this one, and somebody called me out. They say, why are you short Euro Pound when the Edge Finder is bullish? It's a great question. However, this is the top setups page considering COT data, trend, seasonality, retail positioning. When it comes to currencies, I'm much more long-term, and I prefer to only focus on the economic data. So when looking at the economic data, it's not so bullish when only looking at the economic data. But that is typically where, when it comes to the top setups indicator, this is where you can kind of select what is more right to your trading style. This is why we've built this, is because some traders prefer an economic data focus in their scoring. Some people prefer everything, like the main top setups thing. Other people prefer to only look at sentiment, commitment of traders data, retail positioning. Totally valid to use whatever fits your trading style best.
Wanted to just kind of address a couple things, really clean technicals, and why I think we have to have something at least in the form of a light pullback. A couple of reasons. I'm going to highlight this right here. I'm putting an arrow to my 50-period moving average right there. And also, let's count some waves. Since the bottom on April 7th and the rip that we saw on April 9th, if we go 1, 2, 3, 4, 5. I'm not saying this is a guaranteed fifth wave top, but I'm saying that as this push happened for these last 8, 9 candles, I think it would make some sense that we at least see an ABC correction or a 1, 2, 3 correction. So something like this. There's wave 1, 2, 3, 4, 5. A lot of times when we see correction, it is pulling back to at least test the bottom of wave 4 or the low of wave 4. So it'd be past resistance here, Okay, I guess I'm not drawing that very well, but past resistance here or the bottom of wave 4. So an A, B, C correction. That's it. It doesn't have to be huge. It doesn't have to really do any crazy damage outside of just pulling back and checking this trend, and also that 50-day moving average at the very least. We're a lot of points above it, which is also pretty unusual. So value-wise right here, we're sitting around 59.50, and we're at 62.50 plus. I mean, 300 points on the 50-day moving average. Honestly, if you go back to a lot of periods here, you rarely see 300-point moves unless we have a correction coming shortly after. So, for example, this move, we were straight up off the 50-day. That was around 274 points. Okay, the magic number today is 300. So how many times do we get 300 points above the 50-day moving average? You can see it doesn't happen very often. This candle here was around 270, and it went sideways and found the 50-day. Over here, I would say that's a decent stretch, probably not 300 points, but let's go from this point here. Around 230 points. Decent stretch before we had a top. Around 230 points. So, I mean, again, you can go back as far as you want. You're not going to see a ton of overstretched moves above a 50-day moving average without having some type of pause or pullback. So that's my thought. Whether it happens or not, obviously nobody knows. We've got some drama. It's Musk versus Trump 2.0. Who knows? I just know Tesla's being punished pretty badly for, at least with a nasty gap lower. I've got covered calls. I've got collars. I'm just kind of waiting to see, does it get worse? Some of my protections out into August. Here's what intraday price action looks like. So we gapped lower, pretty calm price action so far. And I've got some potential floors today around 62, 35, 30, and 25. Potential ceilings 75, 80, and 85. And price for Monday's trading might be just exactly this, sideways. If it does roll over, the VIX is elevated a little bit. VIX is up to 17.63. If it does roll over, we're looking at like a 1.1% move. That'd be mostly to the downside. So that would be from the close on Thursday. Even though the market closed early, it was up quite a bit. We're up like 0.8, 0.9% on Thursday, even with that short holiday trading. But if we pushed lower for the day, potentially has the kind of 6,200 in the cards if we're going to fall and fill this holiday gap, possibly push a little bit lower. Okay, but so far price action seems to be pretty contained, just a little bit of a gap lower, but that's about it right now. I do have a pending order here at the tops, 62.80 by 90, 85 by 05. So I'm kind of looking at defending these two levels here, 62.80 and 85. I'll keep those right there. So if the ceiling remains in check, then hopefully I see some additional profit. Otherwise, if price breaks the lows, then I'm not going to get filled at the pending orders that I have, which is fine. Okay. All right, let's have a look. Does that make sense on the wave count and the 50-day moving average? And again, feel free. Like, you can go back to any SPX chart, look at the 50-day moving average, and see that we oftentimes don't have a big push 300 points above without having some type of pause or pullback. So again, this week there's not a ton of news coming out this week. This is not the inflation week. This is kind of a nothing week. If we go to high impact for this week, take a look. So today, all low impact. Australia expecting to cut rates by 25 basis points. RBNZ holding rates the same. I wonder what that does to the Aussie New Zealand. FOMC minutes on Wednesday, 2 p.m. I mean, is this a nothing burger? Is this more just focus on July 30th? We have CAD employment on Friday. We had non-farm that they squeezed in on Thursday last week with the job numbers being okay. All right. So this week, FOMC minutes kind of the big one for the U.S. That's about it. We might have some, I don't know, some peripheral stuff happening like noise. Next week, though, inflation data hits. So we have CPI on Tuesday for the U.S., PPI on Wednesday for the U.S., retail sales for the U.S., unemployment claims for the U.S. all next week. And earnings season kicks off this week as well. So the 14th or the 18th, probably a bigger week as far as what's at stake, led by financials, getting into the Mag 7, they're usually the first like couple weeks of earnings season. So I'd say that inflation data plus your round of earnings really hit the headlines. Is it good or bad? What type of guidance do we have? I think the pivot's been hard, meaning the U.S. has pivoted hard towards growth. I think that bodes very well for stocks. It really do. Even if we are passing this tax bill, Trump obviously is pushing it through. Republicans have the power to do so. I know Musk has been vocal about it. It's not really going to matter. I don't think anybody wants to be kicked out of their seats in midterms, which is why they're all voting for it. There's a bunch of terrible stuff in it, just like there is in pretty much every 1,000-page bill that nobody reads. But that's not for us to figure out. I mean, what we have to figure out is, can we trade and make money? And to me, like I said, if I'm just looking at simple wave structure, wave 1, 2, 3, 4, 5, inside of this, I'm looking for at least an ABC correction. Whether that pulls back into like 6,000, that's a shallow pullback, but that still feels like gap here. This would be the ceasefire trade agreement gap if we fill that. If we pull back any deeper, then possibly coming back to this U.S.-China trade agreement gap. But to me, I'd say the market is very well supported. There's a 21, a 50, a 100, a 144, and a 200. There's a lot of dynamic support in here. So, I mean, and this could be one of the more crazy volatile markets if the market came all the way back down below the 200, then had a dead cat bounce, and then fell all the way back down. I don't think that's going to happen. But, would I be surprised? Not really, given what 2025 has unfolded so far. I would say that even if we have a pullback in an ABC type correction, a 1, 2, 3 type correction, we're going to find some really good dynamic support between, I'd say, 5,900 and 5,700 right now, just because that's lots and lots of moving averages. Plus, we've got some gaps in support at previous lows, right? And if you look at this posturing, this high, if this is an impulsive move that needs to have a pullback, that's fine. And then we can base and build up for another all-time high. Okay, let's take a look at some other stuff. So there is our NASDAQ, or our S&P. Let's take a look at NASDAQ here. NASDAQ comparable. Okay, similar structure. 1, 2, 3, 4, 5. So an ABC correction. Do we pull back to here, pull back to here? Somewhere in this area, looking to go long NASDAQ, but I want to see a pullback first. Conservatively, let's say this is around the top. Doesn't have to be the top, but around the top. Are we able to pull back to maybe this level here? That's about a 5% pullback on the NASDAQ, maybe a 6% pullback on the NASDAQ. If it gets a little dicier, yeah, we could have a double-digit pullback on the NASDAQ. This could go 10 to about 12% and still have lots of good support, right? We could still be supported by the 50, the 100, the 144, the 200 moving average. So I'd say somewhere between about 6 and 12% if we have a pullback. Okay, I think the probability of pullback is high. And this is why I have cash on the sidelines. This is why I'm waiting. This is why I'm being patient with some of my strategies and deployments, because I think at the very least we have to have something, like just a reality check, just a pullback, something. Qs, obviously NDX correlated 1, 2, 3, 4, 5, something along these lines here. 1, 2, 3, 4, 5. Okay, do we pull back to this area? Do we pull back to this area? If it gets a little nastier, do we fill this US trade agreement gap? Maybe. Okay, does it mean that I'm taking bearish trades right now? Not really. Daily income wise, yeah. Daily income wise, sure. Like this morning, I did bear call spreads on SPX and it worked out just fine. Okay, but overall, all I'm really waiting for is a dip or pullback so I can position for slightly higher VIX, where we've gone up from lows around. I mean, it had a 16 VIX last week, and now it's up to 17 and change. So that little spike on the VIX is up around, 9%. Okay, so slightly elevated volatility. Do we get the VIX back into the 20s again? Does this roll over? Looking at some support levels in here, do we end up breaking that support? Do we end up breaking this, huge trend line at some point? I don't know. So I just think a pullback's needed, and hopefully we will get one here maybe in the next week or two. Okay. All right, let's go dollar index. Russell and Dow as well. Dow just shy of the all-time highs. Again, even a pullback here. I think that would be great. If we get a pullback just shy of the all-time highs, where? 1, 2, 3, 4, 5. Do we get an ABC correction on the Dow somewhere in here? I'd say between like 430 and 415. So between 430 and 415, posturing for more ups. And I mean, I really like kind of the 1-1-1 strategy for that, where I can do a bear put spread. Actually, this wouldn't be awful. Let me see if I can look at this right now.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.